Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. Welcome back to the show, Mark.
Glad to be here. Thanks for having me, Jim.
Mark, do we have a special offer for our loyal listeners?
I sure hope they are loyal. Let's continue to use the half-off offer, the 2021 half-off, 2021 half-off. We haven't changed the code yet. 2021 half-off when you go to the newsletter and you enter it in any promo code section on any of the newsletters. And also as a disclaimer, I want to say that I am not a financial advisor and I do not give financial advice, but I'm glad to be here and talk about the markets.
Mark, gold and silver, are they finally on the move up?
I don't know if they're really on the move up, because when you say that, it sounds like we're ready to see an explosion through, the 1880, 1900 area, and ultimately that 2060, 2070 high that we saw a couple of years ago, and gets everybody excited. We're in a little uptrend. But it's been that way for now about, 10 days or so. It hasn't just started. It's been inching up there. Silver's been acting a little bit better. I'm long. I'm in there. Sort of keeping my fingers crossed because, you just don't know if it's going to just be another one of these dead cat bounces that go nowhere. So at the moment, it seems to be a little bit of uptrend. The cyclical picture tends to be positive into February. From the fall, but we've had a mixed market and it really wasn't responding to the cyclical picture. So, I'm just I'm in there, and let's see if we get some follow through. But I'm not sitting here predicting a breakout above the all-time high or move above that. It's too early to say. A lot of people are concerned about the markets, the equity markets, and they think that gold, maybe silver more than gold could be a refuge, but we don't know, and so we're trading it. We're in there, and let's take it a day at a time.
That's one of the problems right now. People are saying the markets can't make up their minds. Are we still going to see a bullish market? Is it going to be bearish? Do precious metals give you a bit of a hedge if you're not sure?
In recent history, that really has not been the case. The metals, gold shares will follow the market. When they crash, they tend to throw the baby out with the bathwater. It's not always an inverse relationship. So, cash is actually the best position to be in, which is an investment, decision if people are looking for safety until the air clears. So you don't have to be in the market at all. You could be in cash. And, the moment, we talked about this last couple of weeks. I was looking at the first few days of January as a January barometer for they call it the early warning system. And sure enough, we've been coming down and warned us. So we started up a little bit, and then it was down the first 5 days net. And now we're waiting to see how we close the end of January compared to the close of December. And this is all based on my old good friend Yale Hirsch. I believe he's well into his 90s now, who created the January barometer back in the 1970s, and nothing's 100%, but it basically said so goes January, so goes the year, and sometimes you take the first 5 days, and so far that's been telling us watch out, and so far it's been correct. So I also been talking about Groundhog Day. I've been showing this on visuals for years in my presentations. You tend to get market weakness around the February 2nd Groundhog Day, a couple of weeks either side. We're certainly, close to that window now. Could be a sell-off right into that point, or maybe end in the next few days. So we're this time frame that, has historically seen some sell-offs and really nasty ones, even into mid-February. Then, of course, you got the vernal equinox into mid-March, and that's a change of direction time for many markets. Back in 2020, I sound like a broken record because we've covered this before, but that's your big low following the COVID disaster, and there are other Marches that have over the years coincided with low points in the market. So, basically between now and mid-March, anything could happen. I mean, it could get really nasty to the downside. And now we're finding out that Putin is giving Ukraine some problems, and he must have been short the market. I think he probably makes more money shorting the market, buying puts and staging a fake or real invasion. He'll probably make more money than invading Ukraine and taking over the country. I'm that cynical that I believe that's even possible. So I'm sure those who were around him probably did short the market, thinking that it would affect the market negatively. I'm not that naive to think that these people don't play the markets, but in any event, we've got a lot of fun stuff going on right now, Jim, so it should be interesting.
Well, Putin himself wouldn't be playing the markets, but he'll force his billionaire buddies to do it for him if they don't want to end up in jail.
Well, who's going to arrest Putin?
No, that's what I mean, his billionaire buddies, because he's done that before. The last billionaire who challenged him when he refused to pay a 10-15% kickback was sent to jail for 9 years.
Right. Well, It could be his buddies that, anywhere in the world for that matter. So that's going on. And I also want to give myself some credit for being a little bit psychic, because we've been talking on this program about the geocosmic. And just last week and the week before and the week before that, I'm talking about super volcanoes and the risk of, disaster on the planet, even though we have, in my newsletter, we have the tracking, NASA tracking for the asteroids. And there was one that did come pretty close to the Earth in the last couple of days. It's relatively close, 1.2 million miles, which is obviously 4 or 5 times the distance from the moon, but that's considered close on a cosmic scale. So we had a sort of a warning about this asteroid, and who knows, it could change course and fool the experts, but it didn't, and it continued on. Apparently it was as big as that big building in where is that? In Kuwait, I think. Is it Kuwait, or is it Dubai, that giant skyscraper in Dubai? It was that big. So if that plunged into the Earth, that would create some real problems. But anyway, we had the volcano go off in the Pacific. In fact, I think I sent you a little text and video at the time. And when I saw that blow up, I said, aha, here I am. I'm right on track. It's my psychic energy or my intuition or whatever you want to call it. I've been on top of this for quite some time. People say, aha, this guy's crazy. Well, not so crazy. And there's probably more of it coming. And this is going to affect the planet. And could affect our weather, of course, ultimately, if it's a big enough one, and that could affect crops and food and a lot of other things. So we got some problems coming. There's a lot of geocosmic stuff going out there. We're tracking the sun and the solar flares, and, you can laugh all day you want, but when the power goes off and you see a geocosmic event, you're going to realize that Leibovit wasn't so out there. So in any event, I was really proud of that call. Saying, watch out for the volcanoes, and then one blew up and really was big, because, we know the tsunami even hit the west coast of the U.S., not as big as it did back in the Samoa and that part of the world, but certainly that was a factor. So, the markets are responding to a lot of things. They say it's the Fed, it's Putin, it's Ukraine, it's the inept Biden in the White House. We could talk about all kinds of stuff. But the planet is changing too, and we're in this cyclic period. And in fact, we've had a pass of an asteroid not that far from the Earth in geocosmic scale, and this volcano going off, and the markets are coming down now, which is cyclically a negative time of the year. And the old groundhog knows certain things, I guess. So it's there's no great surprises out here. I mean, any time you had asked me 6 months ago what I'd be expecting this time of year, I'd have told you about the groundhog and all these other things. And this is a time to be cautious, and we're in that cautious time frame. The question is, how serious does it get? And we don't know if it's a bear market or just a correction. It seems to be setting up to be a bigger correction. And we always have the plunge protection team out there. which was created by Ronald Reagan, that executive order 12688 back in 1987. So the feds can jump in there and buy the S&P futures and buy stocks, and they could buoy this and take it up if they want to. So maybe they don't want to do it right now. But this is an interesting time, Jim. So I wouldn't be looking for a lot of hedges. You got to be very careful here this time of year, and to try to pick whether it's gold or silver or some individual stock that's going the other way that you feel is a safe place for your money, is a speculation as well, because they all tend to come down when margin calls come in and people start panicking. So, you trade day to day. We try to do some of that for ourselves, but bottom line is cash is not a bad place to be.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, in really good times, all my friends, the ones we talk to on our shows on House Street, are in the newsletter business, and they say they find it hard to pick up new clients when times are really good. But is this the kind of market where maybe people should start subscribing to newsletters and maybe taking advantage of your special offer, because we're in what the Chinese curse says, may you live in interesting times?
Well, there was the adage that when things are good, people buy the newsletters. And when they're bad, they tend to stay out of the market. There was actually a fellow years ago who created a newsletter. I think he called it the Downwave Digest, and the thing failed because we were in a negative period at that time. I don't recall exactly when, but it was when the market was in a bear market, but nobody was buying it because they didn't want to make money in a bear market, or they weren't interested in shorting stocks or whatever. Most of the community that I see that's really successful and active are the traders, and there's millions of them, and they're out there all day, whether they're trading futures or stocks, or maybe some are trading the cryptocurrencies and gold and silver and some of these new non-fungible tokens, the NFTs out there, which have become really hot and expensive recently. But it's really the traders that have been snapping up the research and the newsletters and following, people like me, because that's just the nature of the market now. That I think the people that are long-term in the market have pretty much put their money away with the investment advisors or money managers, and just, sit back and say, we're just in there. We trust these people. They're going to do their thing, and we don't need any newsletters. We're just going to let our financial advisor take care of us. So I think that's, there's probably the good majority of people out there, I think, who've just decided that it's too volatile. But for the newsletter people, it's more on the trading side, I think, that it attracted a vast amount of people. I mean, I'm not underscoring it. It's not the majority by any stretch, but, I just see it every day, and they're at all the trade shows, and they're online, and I monitor a lot of these services, and, that's if you're looking for action, these are the people you go to, and, I guess I'm one of them in sort of sense, but, there's a whole group out there, and I think that's where the newsletter business and the advisory business has, I shouldn't say advisory, it's more educational services like mine that have migrated.
When we had that major March bump, so many people complained I had no idea this was about to happen. And I can say here on House Street, several of my guests were saying, we're set up for quite a bit of a correction here. Be on the lookout for it. Maybe go to cash right now, buy the dip. And how many people afterwards said, well, gosh, they were right. We should have paid attention. But it's so hard when you're in a market like this to pay attention to day-to-day action when you're still trying to run your everyday life as well. The wife, the kids, the house, snowstorms, floods, heat waves, cold waves. There always seems to be some kind of problem that needs your immediate attention. And perhaps for most folks, your finances come last.
Yeah, well, I just got off the phone with a mortgage banker earlier today, and he's got a wife who's got the COVID or some version of it, and it really messed up his day taking care of his family and so forth. So it could be a whole bunch of stuff that distracts you. Yeah, so you got to decide what you're looking for. You know, some people buy annuities who get the guarantee that you can't lose any money, that it's no downside, and they have participation to the upside. Some of these index annuities that are out there. Some people just go into CDs. Some people just own treasury securities or corporate bonds. Others are traders, and the whole other group have a bunch of money managers who hopefully are diversifying their portfolios. It really is. It depends on your temperament. But, you know, most of the working people have 401k plans at their employers, or they work with companies that have retirement plans, and it's usually out of their hands anyway, and it's in the hands of managers and others that manage this money. So I think for the mass majority, they're just like, we're just like pawns in a chess game. We're just sort of taken along for the ride, and wherever the market goes, you know, we benefit. But the long-term scenario for the markets, as we know, over the last couple hundred years, since it was created in the late 1700s by that buddy called the Buttonwood Tree at where the New York Stock Exchange is today, it's basically been up. Yeah, we get our corrections, but it's been basically a diagonal, moving from left to right and moving higher over time. And I think nothing is going to really change that. So unless, you know, everything stops for some geocosmic reason, but I think the trend is up overall, and you're going to get your bear cycles. And for a lot of people, that's okay, because they got 20 or 30-year time horizons or more, and they're happy with just sitting back and watching the ups and downs. You know, they've been spoiled too. But look what we saw in April of 2020. I mean, a huge correction in the market. You know, nearly a 30%, I believe, was a correction there, and it comes roaring back. And then we saw even after 2007, 8, 9, the market comes back again. So I think people are sort of spoiled and conditioned, and I don't know if that's going to work against us long term or not. I don't think so, but you know, they feel with patience that every down wave is temporary. So why not stick with it? And they haven't been wrong. They haven't been wrong, but they had to suffer through some of the choppy periods.
The Bank of Russia says it's on the verge of banning cryptocurrency transactions and mining. Is that going to have a major impact on the cryptocurrency business?
I think it's a bunch of hogwash myself. I mean, this is the big trend that's underway. You know, the crypto world in the next 5 years, not to say it's not going to be big sell-offs like we saw just in the last few weeks. We've seen it before. Could be couple-year cycles. This is the new trend. And China tried to ban Bitcoin, and they changed their mind. It's juvenile. I don't know what else to say it. I mean, the trend of the younger generation, of the biggest financiers on the planet, I think they're just trying to keep people out of the market. I think it's almost like a conspiracy. Manipulation, you know, put out bad news, scare people, talk about how it's going to be made illegal, and they just put out all these stories. And I think, you know, the smart people are accumulating key cryptos or creating new ones themselves, and the governments themselves want to create the digital currency. So I'm going to go back to my original statement. It's hogwash. You got to ignore it. It doesn't mean it's changing the trend in the big picture trend. And you have to decide first what that portion, if any, of your portfolio that you want to participate in this market. I mean, they laughed at gold and silver for years. They laughed at cannabis stocks for years. They laughed at, cryptos. They're going to laugh at anything that's new and different or that's something they don't understand. But it's not going to change where the younger generation, all kinds of kids and investors, everybody's in this market. It's not changing. And why are they doing it? Because they fear government. They don't trust the banks. They want to have a medium of exchange away from the system. And this is what it's all about. And it's the surge of independence and freedom around the world. And we know how inept the governments are. I mean, the Federal Reserve destroyed the U.S. dollar. It's down, 95% since the Federal Reserve was created in 1913. So governments are horrible in managing their economies and their currency. So why not be in something that's alternate, whether it's real estate, whether it's gold and silver, if you believe that's the hedge, or whether it's crypto. So I think that the future is bright.
Mark, thank you so much for chatting with us.
Thank you for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. If you have any questions for Mark, you can send them to info@housestreet.com and we'll ask that question for you. Find us on Twitter @HouseStreet. We're also on Facebook. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.